receivers will have bank accounts with bank B, and bank B is able to deposit the funds to the receivers. That's like an interbank transfer, whereas intrabank transfer, senders and receivers have bank accounts with the same bank, which is bank A. Let's though understand also the stakeholder hierarchy in a payment flow. So on the top level, we have got consumers, businesses, money transfers. They may have bank accounts directly with a bank, a commercial bank that is a clearing and settlement bank. An example of such a bank here in the UK is Barclays, that has settlement accounts with the Bank of England. However, there are also alternatives, like consumers and businesses may have bank accounts with an EMI, an electronic money institution, such as Revolut. And Revolut, in this case, for example, would have bank accounts with a commercial bank. In addition, have settlement accounts with the Bank of England. But regardless, one has to have, in order to tap into the payment scheme, they have to bank with the bank or have settlement accounts with the Bank of England. And there are different payment schemes here in the UK, which is called jumps, backs, faster payments, and clearing and credits. Now, over the past few years, there have been developments in the payment sector. One of those are ISO 222. The Bank of England is looking to actually get firms to use ISO 222 within the next 1 to 2 years max. Which means that the messaging of the payments will change. The advantage of ISO 222 is structuring payment data, so it's nice and neat, which will make it easier to analyze and track, and also achieve harmonization and interoperability between systems. Another development is the new payment architecture, which effectively will transfer the backs and faster payments within a single infrastructure. Other developments are CBDCs. There's many central banks around the world exploring CBDCs on a retail and wholesale basis, and how these could replace partly physical notes and coins. And then we also have got stable coins, which have been around the past few years, but central banks are looking how to support within a regulatory perimeter stable coins that are 100% backed by central bank money or deposits. An example of how the advantage of what a CBDC transaction flow would look like is basically banks could settle efficiently between themselves. But there are many more functionalities and reasons why these would come into play. Nevertheless, there are plenty of payment risks. One of the most important risks of payments is fraud. And there are romance scams, phishing, and other type of fraudulent transactions that take place. And other types of risks are cybersecurity risks, where there's data breaches, and bad actors can have access to sensitive data, which they can use to commit fraudulent transactions. Lately, it's becoming more aware, people are becoming more aware about also operational risks, what's the knock-on effects of system failures, system vulnerabilities, and ICT incidents, and what can that cause to other parties. We have Effects risk, counterparty risk is if a counterparty fails to basically defaults and unable to fulfill payment obligations. I've also put down regulatory risks, because if the regulator freezes the permissions and changes the regulatory status of a payment firm, then that payment firm is unable to operate really. And then we have got liquidity risks, reputational risks. I mean, mainly payment firms may go out of business because of money laundering and fraudulent transactions taking place. Secondary risk, and also added volatility risk, because one has to be aware also that crypto assets, and if one doesn't understand the underlying value of the crypto, and they use it for payment purposes, that they will encounter volatility, high volatility. Fortunately, technology has helped transform the payment landscape. It also has helped businesses scale, become more flexible and more efficient. For example, cloud providers have enabled payment firms to scale by supporting their technology platforms. And AI has been used to identify transactional patterns and detect fraudulent transactions, something that would have been done by manually by people. APIs have led to interaction of multiple payment systems and have automated processes and exchange information. And we have seen applications of technology and how that has transformed payments over the past few years, just like Amazon and Uber, as I mentioned, Apple Pay, and also ID verification. When one wants to open now a bank account with a challenger bank, they don't need to go to a branch. That can be done seamlessly online, digitally. And I've mentioned technology has been used a lot for good purposes, like beneficial purposes, like AI has been used in compliance. Just mentioned ID verification, which has cut a lot of costs and has enabled people to open easily and seamlessly bank accounts. Also, voice recognition as part of an authentication process, and for transaction monitoring and detecting fraudulent transactions. But AI and other technologies also have been used on the flip of a coin for by fraudsters. So bad actors have been ahead of the game. One of these is, for example, deepfake, where bad actors have used AI to impersonate people to access payment accounts. And also another big issue is deep voice, where they scam people through a fake voice. And cyber attacks take place where bad actors can cause damages to the systems. So that means that also technology has a bunch of risks, which people with payment firms has to be aware and have to be able to control and monitor. So we've talked about one of the risks, like financial crime. What happens if a bad actor falsely impersonates a person to access payment accounts? Lack of operational resistance because of system failures and vulnerabilities by third parties. Just a week ago, I read on Finextra that there was a ransomware attack on a vendor that was causing an outage to 60 credit unions in the US. And lack of vendor security or insufficient encryption or technology risks that not only vendors but payment firms have to be able to control and monitor. in addition to unauthorized access. I have a list of there. Well, regulators try to stay on top of the game. The recent regulations that are forthcoming within the one, again, to the next 2 years is PSD3. It's an upgrade from PSD2. It will enable payment service providers to share data to fight fraud. This is actually, there are many people in the financial crime sector that are looking forward to this. And PSD3 looks also to improve transparency for consumers and also assist in a further level playing field between payment firms, non-bank firms and banks. It's also looking to standardize customer data and technical interfaces. There has been some enhancements also from a GDPR perspective, enabling the customers to have better control of their data. Over the past few months, consumer duty has been enforced, and the FCA is trying to enforce it onto on financial services sector, so that it can deliver better outcomes for retail consumers in terms of service, in terms of product and price, but also helping payment firms and financial institutions to understand customers' needs and identify their vulnerabilities as well. We have got the joint money laundering steering group whereby payment firms have to comply with UK anti-money laundering rules and counter terrorist financing, but also DORA, which is its deadline is in January 2025, and we see that payment firms, financial institutions, third parties that provide critical services have to take the appropriate measures to ensure that their operations are resilient, digitally resilient. I also feel it's important to talk a bit about data privacy. It's important for people to understand when they make a transaction, what data is shared with their provider, with their bank, and also ensure that they take appropriate measures that their data is not misused. So, for example, when one makes a contactless payment, the card schemes are able to, they collect data, for example, location data, in addition to amount, and the sender and the beneficiary, but also if you make online transactions, there could be metadata that is captured, such as browser data, location, and other. And it's important to be aware, because if there is always a risk of misusing transactional data by third parties. Now, if we take all of this and if we take technology and the evolution of payments and regulation, we have seen also that has made a push so that firms continuously evolve also from a business model perspective. So we have seen over the years software as a service that has evolved as a platform as a service. And the past few years, you may have heard the term embedded finance, where fintechs have been offering banking solutions as a service as well. and that has enabled the payments industry and the fintech industry to grow and evolve. However, all these forces also collide between amongst each other, and that means that people may lose some focus by only concentrating on one of these forces. So it's very important to step back, understand how innovation, regulation, technology, and business model evolution works, and the relevant risks that keep a senior leader must have and keep a holistic picture and focus on their North Star, so that they're able to navigate through this ever-changing world. Well, thank you very much for listening. My name is Chryssi, and I'm open to any questions.
Great. The ISO 2022, does that basically try to unify the metadata for things like a Swift message, a chat message, etc., or is it, am I misunderstanding the direction of travel?
ISO 222 assists by structuring the data, so there have been many empty Swift messages where the data has been unstructured, and that has led to, I mean, if the data is unstructured, it's hard to, for example, analyze, track payments. It involves further costs if there is a need of an analysis, where now it's very neatly decomposed in their appropriate fields.
Okay, thank you. First bit of financial services programming I did in '94 was Swift message processing for Deutsche.
Yes, apparently this has been, they've been working on it for many years, but now it's actually taking effect.
I have a question from Stephen Darlington online. It refers to 2 or 3 slides back. He says, how does all this compare internationally? A few years ago, it seemed that Singapore, for example, was a long way ahead of us.
Oh, yes, that's a very good question. So I've been following the Monetary Authority of Singapore and what Singapore is doing. And yes, they have been very innovative. I think it's hard to answer. There is a lot of competition. For example, there has been noted a lot of competition also on the CBDC. So there is also a push from the West to compete with the East on CBDC as well. So it's hard to say which country is really leading on the different areas, but there is a lot of innovation in Asia and the Far East, I would say.
One of the bits from my perspective, my personal experience was that the difference in regulatory framework makes a big difference if you've got principle-based regulators versus rule-based regulators.
Well, there is a lack of harmonization of regulations across jurisdictions, which make it very hard so there's great innovations and great ideas, but if you put them in practice, and especially when it involves cross-border, then it's so hard to implement. Because if we just talk about data privacy, there are different expectations and different rules, say in Southeast Asia and different in Europe. And then it's hard I've been working on it for cross-border payments to be frictionless sent from one jurisdiction to another, because just the compliance expectations they're not the same.
I've got a question of my own. Picking up on the last question, it's not just the regulations, but it's the standards. I mean, in this country, 2 years ago, we introduced the messaging standard was changed to from being a one-way street to a two-way street, so that before a payment was made, the name on the account it was going to was checked, and that was not a trivial exercise because the names, are not standardized themselves.
Yes.
But do they do that in other countries? I don't know.
Well, I can't answer that. I have done quite a lot of research from the compliance perspective when one has to do checks, KYB checks, and which includes also UBOs, so ultimate beneficiary owners of the companies. And whether you are in America or in Europe, if you have a client or and you have to do your KYB checks. And unfortunately, the KYB checks are based on public registries, and those public registries are not updated frequently. They're not updated on the same frequency basis between different countries. So you get inconsistencies of that. Then third parties who pick up the data from those registries may translate the names incorrectly, which creates different, you get different information, depends on the vendor and the third party. So there are some inconsistencies. So in terms of getting everything right and consistent across jurisdictions, I think there's a lot of work still to be done.
And does that then inhibit the ability of police enforcement of push payment fraud, because the money's being bounced around and then eventually sent abroad to an account in another country, Europe or somewhere else, and they can't, in quotes, follow the money?
Well, I know at least in this country, I've seen a presentation lately that the police have done, the Metropolitan Police has done a lot of work on push payment fraud, and it requires collaboration across different countries. So because there may be websites that have been set up by bad actors, and they move around between countries, so you can't really determine where they reside. But yes, I think it's an ongoing. I mean, I think they're aware of how hard it is. Bad actors really are ahead of the game, and that's why in my presentation I wanted to mention that it's very important to have in mind that technology is used for good, but for every technological advancement, there's always the flip side, and it can be used by bad actors, and they're tremendously savvy. I don't know if that answered the question though. Any other questions?
I did have a question, but the main question is, where's the power outlet? And really exactly. I did have a question that says how payments relates to open banking.
Oh, yes. Open banking. Without cash. Oh, yes. Yes. That's a complicated question. Great question. So a couple of days ago, again, I read a piece of article that actually Denmark is thinking to go completely cashless. I can't say, I can say cash is still necessary in the society. I mean, there are many businesses Yes, there are many businesses that operate on cash, like electricians, plumbers, builders. So going completely cashless could lead to financial exclusion. I wouldn't say that it's the option. Having that option there, yes. Then if we go in the second part of the question, if we were to be completely cashless and emerge into the digital world, things could be done much more efficiently. I mean, we have seen the benefits of electronic payments and using cards and online banking, but there are also other risks. The complexity of the risks, in my point of view, does increase because there are many interdependencies. So that network becomes more complex, and if the bad actors are very savvy, and one has to be very sure that the digital network is completely secure, encryption methods are continuously improved.
I have a related question from George online. Given the undoubtedly extremely fast-paced development and growing sophistication in the payments industry, is it time to start planning for a future without cash? And if yes, are there any foreseeable dangers, especially in underdeveloped economies?
Yes, this was partly what I was trying to answer. So yes, I mentioned Denmark has become completely cashless, and yes, we would have to plan for a cashless society. However, I think doing so it includes a lot of risks because there are many communities that still use cash, and I don't think that's the answer. Having the option there, yes, but it would be hard to just transition without thinking carefully the impact on communities.
I think Sweden's had the same problem. They went cashless 2-3 years ago, and now they're having problems with social exclusion.
Yes, if we think just what's going on with the bank branches, they're being closed down, and there are many parts of society, especially in rural areas, when they're still not that digitally savvy, that want to visit the branch and do their business. What would they do? The other thing is that customer service has to improve. There has to be better processes in place to investigate issues, assist customers that are vulnerable. So in terms of financial exclusion, there are customers that are either vulnerable because they're elderly or because they can't physically do some things online. So they have to be accounted into the design of a cashless society.
In Europe, there is already a regulation out there that made everyone mandated every shop to be able to accept a card, even technicians, people that traditionally were not accepting cards. They now carry POSs or they have applications on their phones accepted. So it seems that if there's enforcement from the government that says that everyone should accept a card, then the problem remains with only those individuals who do not want to have a card. And I wonder, do you agree with that, first of all? And also, do we have any statistics as to how many people are still without a card in Europe?
I'm not aware. I haven't really researched such data to be able to provide a substantial answer. How many people use card and how many people do not? But what I am aware is that when you design or take some decision as to how to service different types of community, you have to consider the customer needs, and these may vary from country to country and from different geographical areas. And I feel there will be risks by doing that without taking this into consideration.
There was a report on the BBC in the last week, and it was a couple of weeks, about, I think, the proportion of cash transactions increased in the UK for the first time in about 4 years.
I did notice that.
Because there was also something about a bank closure, and again, the fact that disabled, as you say, the elderly, but also disabled people may not be able to do digital banking adequately.
Yes, and these are the type of risks, and although digital payments hope for, or like you would see on the website for CBDCs or digital, they would assist financial inclusion. One has to consider, though, the culture and how a society operates in different geographical areas. So perhaps mobile payments work in Africa because there was not an infrastructure there, and they developed and used it in other ways, but it doesn't stand true here in Europe and in the UK. And it's different again in the US.
They still have checks.
Yeah,
US
exactly.
In the US are a long way behind. They're starting to implement payments, but it still costs you $25 to make a wire transfer, which is the equivalent of a BACS transfer for us, which is totally free.
Yes,
And they do use a lot of checks.
Yes.
yes, and yeah, I haven't done much research on the US checks, but I understand it's quite manual up to recently in the way they process the checks.
It sounds like the old 80s clearing that Barclays used to do with checks,
Well, part of their problem is that they've only recently introduced, in the last about 30 years ago, introduced interstate banking. Before that, there was no such thing.
Yeah.
That's why they invented travelers checks.
Yeah.
So they're still suffering that legacy.
Yes, and this is maybe one of the reasons why Asia is actually innovating, because in the Western world we have these old legacy systems, which makes it harder to change because things are being done in a certain way.
If you want to take a philosophical view as well, the problem about if you go to purely electronic banking is all anonymity is lost. Because somebody knows absolutely everything you're doing financially.
That's interesting, because one of the technical requirements for a central bank digital currency is that form of anonymity. So it is like cash. It is anonymous.
But do you see a central bank or a regulator giving up that possibility?
Not really, but apparently still in the list of requirements, which makes it so you've got digital fiat cash, and the other reason people don't want it is that it enables the government to, at the stroke of a button, give you all a haircut.
Yeah.
Or at least negative interest. That's scary.
Yes, I think the design of the CBDCs and where we're heading, but there are so many central banks working on it. It's the way payments are just evolving, really. That's perhaps the reason I just put a slide on data privacy. So when one makes a payment and using a payment method, one has to just be aware of the information they're giving away, really.
Now I would actually see this as an advantage, not a disadvantage. The fact that when you do things, when you pay digitally or with card, you're not anonymous, because one, there's less space for money laundering and financing terrorists, and there is more protection, I would say, because Because if you give your money to fraudster, you just lost your money. If you pay with a card, you have a chance of getting the money back under certain conditions.
Yes, and everything has its benefits and risks. It's always two-sided, and you want to weigh out the benefits and risks. So yes, one, you may have you get more transparency in the data, there's more information about compliance. Banks could do compliance checks more efficiently. On the other hand, yes, you have your data there. People just know more about how you transact, where and when.
So sorry, totally different. This is on CBPs. I'm asking from the perspective of a regulator. Do you think is there an actual willingness to make it seamless, to make CBP seamless, cross-border payments?
Cross-border payments. Yes, that's it's a difficult question. So Starlix, that was the mission of the company I founded, was how to reduce friction in cross-border payments, especially to developing countries. And I started very optimistically that could be possible. And along the way, I understood the complexities, the number of stakeholders involved. That's why I found the presentation in such a way that when you think about, say, a payment or anything, you have to really understand the stakeholders involved. It's making an efficient cross-border payment is so much. It's a much greater problem than what initially one realizes. First of all, banks want to make money. Cross-border payments, especially to developing countries, the compliance checks cost a lot of money because the compliance information is not there, or it's not the same as in the Western world. So there is a gap as to what data is available. And one has to also understand the type of flows and to which country. So if we have a large number of flows, but the value of each flow is very small, per transaction, there is a certain operational and compliance cost, but what's the revenue? And if in general it doesn't make commercial viability, then those flows are not done by certain banks because they regard them as higher risk and they don't make money out of them. And then also it is whether it makes business sense, whether they want to have exposure to such countries.
So is that where you get things like, well, that's where you get payment delays, because the only way that you can make some money is by grabbing it on the float?
I wouldn't say so. If that's the reason of payment delays. There's definitely been de-risking going on into the sector, which means reducing your risk, reducing from your portfolio certain businesses or certain countries, because they are considered high risk, whereas effectively it's whether they make money or not out of those segments. Now, whether there are delays, yes, there could be checks done on transactions. That's where delays occur. That's one of the reasons why 122 may actually reduce such frictions, because the data is slotted in a structured way, which would make it easier for a machine to read and process. But then one has to think about the correspondent banking structure, the stakeholders there, or the interests. So it's a much wider problem
Yes, so that's where my question actually stemmed from, because in explaining, you mentioned something saying there's high risk and low commercial business. But taking Africa, for example, and then the other emerging markets, assuming I did own a factory in Africa, all right, most of the things I'm going to get or need in working in my factory would definitely have to come from Western countries. Then this would therefore mean I'd have to probably transfer money or have money here to bring back whatever I need. So yes, in as much as you may have identified as high risk, the low commercial activities then is a bit nullified, because it really is very necessary, and the Africans actually generate more businesses for these other banks, if you understand what I'm saying.
Yes, but then it depends which African countries, how they're rated on their sanctions list, or on the high risk list. They have low, medium, high risk.
Yes.
And if the risk profile of a commercial bank is X, then it's hard to do business unless it makes serious business sense. So yes, I wouldn't say there is a straightforward answer. I mean, I haven't done a lot of research in it. I know that the Chinese deal a lot with Africa, and there's an opportunity of cross-border trade there. But yes, it's not that of a simple question, because there's a lot of politics involved as well.
Yeah, so that's where my question actually stems from together. Is there the actual to make cross-border payments seamless? Basically, is there an actual willingness?
It's hard to answer. I mean, I would love to say yes, and I would love to say if we get an interoperable system that people dispense, yes, the transaction will be seamless, but there's more to that, my answer. And it's hard to define because there are many stakeholders involved, so it's not that simple.
Well, speaking of interoperability, I mentioned it, right? There was Circle. I don't know if you knew of Circle. So basically what Circle does is to receive funds via crypto and then credits whichever bank account it is, which obviously did get shut down because of the SVP, sorry.
FTX or SVP?
Silicon Valley, because obviously they held in the USDC was devalued and was. So then again, the question comes in, is there an actual willingness? But Circle actually had a structure. Circle actually had an infrastructure to make these things happen. Speaking of interoperability. So basically it's. But
you said they used USD?
USD to USDC crypto.
Yeah, but that's why I mentioned in the risks, cryptocurrency volatility risks. I mean, there has been lots of underlying risk, which I believe people have not understood. So when stable coins came out, like Tethercoin, everybody was like, oh, Tethercoin pegged to the USD dollar. Well, what does that mean? It was initially collateralized by, I don't know, US treasuries or X asset. Then it devalued to 58% collateral. What does that mean? It isn't really half its value, really. Now it's a basket of different assets, including US treasuries. So is that risky or not? In my point of view, it's risky.
It's a bit like a physical gold UTF versus a virtual gold UTF. There's no asset behind it. It means it's worth whatever anybody's willing to pay for it.
Yeah, well, if there was it was a digital asset, and you have the physical asset back to back.
If you've got one-to-one back, then there's no risk. But as soon as you go away from that,
I think the other one, which we all may have forgotten by now, that Facebook were going to introduce a thing called Libra.
Yeah.
3 or 4 years ago. Now that did pose an existential risk
Yeah.
to sovereign fiat currency.
Yeah.
Because it was and that's why the US Fed and the Bank of England killed it stone dead at birth or before birth. Simply because they recognized that that was a cryptocurrency, in quotes, which had real traction and was as a threat to them, and they killed it. And that's why they haven't killed any of the others, because none of them pose a real threat yet.
Yet, yes.
I have noticed that there was a reference to the CBDCs, but there wasn't a lot of reference to cryptocurrencies. Obviously, this market is low this year, and but we do expect the MiCA regulation next year,
Yeah,
and we do expect developments there as well. So I was just wondering why is it because of the risk that we're discussing that
yes, I didn't include that much crypto because I don't want to give emphasis that crypto is a form of payment. Because why should it be a form of payment? It's highly volatile. I wouldn't consult anybody using crypto to make payments. If they want to invest it on their own risk and make money on and trade it. Yes, people have been trading crypto over the past few years, and some people have made tremendous gains, and some people have really lost a lot of money. It's really a speculative asset, in my point of view. So, for that reason, I did not include it.
Does anyone have any other questions?
Any more questions?
Any more questions from anyone? Right, okay, that's the end of the
Thank you.
presentation. So thank you
for
for
listening.
asking.